Good afternoon. Welcome to Cannabis Live. Thanks for joining us this afternoon. I'm Travis Copenhaver, joined today by two of my colleagues, Simon Gumma, Nick Galendez. Today we're going to dive into a couple different tax and different CPA topics. Before we get to that though, I'd like to just talk briefly about our upcoming seminar. We are going to be having our Cultivating a Successful Cannabis Seminar coming up on September 27th at the TCF Center. We'd be happy to have you join us. We're going to have several guest speakers, including Mr. Gumma. Myself, Nick, Barton, and all the team are going to be talking. Special guest Al Harrington is going to be our featured speaker. We'd be happy to have you join us. We really want to put on a seminar that's going to talk about issues that actually impact the operation of your facility. So again, that's Cultivating a Successful Cannabis Business. It's September 27th at the TCF Center. Please feel free to give us a call if you'd like to talk about coming. We'd be happy to have you. So Simon, thank you for joining us this afternoon.
Thanks for having me.
Yeah, let's jump into some of the different topics we want to talk about today. Nick, you want to tee us up here?
Yeah, so I think, here at Cannabis Law, we like to kind of dip into a lot of different topics that really go to the heart of licensing and compliance. Architects, engineers, securities, capital raising, compliance, just a lot of different things that really touch on keeping your license and running a really tight ship as a cannabis business. And one of those kind of pieces of the puzzle is using the services of an accountant. There's a lot of different things, tax returns, yearly reports, financial statements, attestation letters that need to be prepared throughout this process. And so we invited Simon over here, whom we work with very closely, with a lot of files, and kind of to pick his brain about just the different issues and important topics that everybody needs to be aware of. So I think I wanted to start off by just kind of asking, what is an accountant? I mean, I know a lot of people use them and interact with them on a frequent enough basis, but kind of just give us an overview of what kind of work you're able to perform and what really the kind of meat and potatoes of your job is.
Sure. So an accountant or a CPA normally practices under licensure from the state of Michigan as a certified public accountant, and we provide tax, bookkeeping, payroll, and other consulting services to nonprofits, individuals, small business owners, and even large corporations.
Very cool. So kind of just jumping into it, one of the things I know a lot of applicants right now and licensees are going to have to deal with is renewal. And as part of the renewal process, there is, you have to submit your latest federal and state returns, sales tax returns since December 2018, which also includes proof of payment and receipts. And then kind of around the same time, the fiscal year is ending very soon, and so there's also financial statements that are going to be due for the total operations of each licensed facility. So kind of to discuss that, let's kind of dig a little bit into renewal with just the tax returns and the sales tax returns, especially kind of walk us through what operators should be starting to do now, what they should have been doing since licensure, just to kind of make sure that all the accounting is really very above board.
Mm-hmm. Right. So if we start with sales tax, we need to make sure that the retail licensee is collecting and paying sales tax at least monthly to the state of Michigan. Depending on the volume, you may be subject to paying those quarterly or even annually, but from the numbers I've seen, the licensee will be paying those at least monthly.
Yeah, let's talk about what that kind of threshold looks like. So obviously it's about the amount of income you're demonstrating, right?
Right.
Do you know kind of what those thresholds are?
Yeah, the threshold is really small. So if memory serves me correctly, $300 or less, you can file an annual sales tax return.
Okay, so not very realistic.
Yeah. So okay. It's really for those type of establishments or businesses that may incur sales tax or sales tax sales.
Like ancillary to maybe what they're actually offering.
Correct.
Got it.
And then anything over $600 is going to be you're going to have to file at least monthly.
Right, and that's $600 of tax, right?
Not sales tax.
Not the sale itself. So if we're talking 6% sales tax, it's 6% of the total gets us to that $300 or $600 amount.
Right.
Got it.
Right. And with that, there's obviously payroll taxes. So with the state of Michigan, there's what's called the sales use and withholding tax return, and that gets filed online through the Michigan Treasury Online Portal, as we call it, MTO. You can still paper file. We have clients that actually don't have a bank account, so they're paper filing, they're going over to the state and making an appointment because they have a lot of cash, and they're remitting their sales tax payment along with their sales tax return at the same time.
So I'd imagine then a lot of provisioning centers would be using that approach because a lot of the ones that I know we work with aren't in a position to have bank accounts. And I assume that's going to be the case for most provisioning centers, at least for the foreseeable future. So in that situation, there's not an online version. It would be paper, correct?
Well, you could still e-file the return and then pay in person.
Oh,
at
okay.
one
So
of
it's
the-
kind of a
Right.
little bit of both. Okay,
Right.
gotcha.
Right.
Got it.
And this is a little more unique to provisioning center licenses because they're receiving that more regularly, correct? I think for other licensable types, they may not be dealing with this particular issue as far as proof of payment or receipts or, the actual sales tax. Is that correct?
Right.
As far as just the type of license and the types of businesses they're selling to as compared to the consumer.
Right.
Right.
So the sales tax is on the end user, so retail establishments, so the growers, the processors, and the secure transporters. There is no sales tax collected or paid, so there's no need to account for that.
And before that, I think in March too, the excise tax for provisioning centers kind of fell away as well. So really, for provisioning centers, it's the sales tax and any other applicable federal and state taxes that we're going to dig into a little bit later. For those other license types, not sales tax, so this is kind of less of a issue for renewal and keeping track of. But the one thing I did want to talk about, which is coming up and we've yet to hear a lot of information about, really is what they call the financial statement. So Section 701 of the MMFLA says that by 30 days of the end of the fiscal year, each licensee has to submit to the state and the municipality a financial statement of the licensee's total operations. And basically that financial statement, which we can kind of talk about what that actually means and entails, must be reviewed by a CPA in a manner and form prescribed by, it says the board, but prescribed by the agency. Licensed CPA in Michigan has to do it, and compensation must be paid directly from the licensee to the CPA. So kind of to break that down, what exactly is a financial statement? You can kind of talk about what would really go into that, how long it would take to prepare, and kind of any other potential issues that operators should be concerned about with having this done so soon and without really very much guidance from the regulators, at least right now, with September, the end of September creeping up on us very soon.
Right. Well, let's just break down what is a financial statement
Sure.
first, and then we'll talk about what this process might look like.
That helps. So a financial statement is very broad. There's many schedules that actually comprise of the actual financial statement to include the balance sheet, the profit and loss, or as we call it, the income statement, the statement of cash flows, the retained earnings statement, among others, and of course the notes to the financial statements. So from what I've gathered, the state is looking to receive some type of financial information from the licensee that explains in a financial statement format their revenues, their expenses, their cost of sales, their assets and liabilities, and what the overall equity or the health of the company really is. That's what the equity does, or that's what it presents, right? So the state actually hasn't released official guidance as to what exactly they're looking for, and we're waiting for that, and we're under that time crunch here because it is 30 days after the fiscal year close.
And that was after talking
Right.
with the MICPA and kind of having discussions with the state to see where they're at with that. You were saying that, things have yet to be finalized and determined at this time and in this date.
Right, so in the rules that you just touched on here, the key word is reviewed, and we've seen that word before. There's different types of service engagements that a CPA can perform to include an audit, review, or even a compilation, or an agreed upon procedure. So a review requires a CPA to provide some type of opinion on the financial statements. And I don't know if the state is actually going to require, at least my opinion is that they will not require reviewed financial statements, but more an agreed upon procedure type engagement.
So just sorry to stop you there. Is a review basically kind of the highest tier where you're giving your actual spin on whether kind of one way or the other how healthy a business is, versus an agreed upon procedure is kind of less strenuous. You're not providing kind of a really overview of that?
Comparing the two, yes, but the highest ranking is an audit. An audit requires a tremendous amount of time and man hours, and it requires a CPA to run analytical procedures and actually give an official opinion. And it's very timely, and it's pretty costly as well to an enterprise. A review is a step down. It gives limited assurance from a CPA on the accuracy of those financial statements. And an agreed upon procedure is something specific. So if the state is looking for specific information on those financial statements, that's where the agreed upon procedures comes in. It's kind of a hybrid of a reviewed financial statement, maybe a tone down from that type of engagement as you had mentioned.
Okay.
Gotcha.
Yeah.
It's always good to know. I know we were talking before the show just about all the words that get thrown around when we work with Simon, and it's just kind of always good to kind of have you lay it out there very
Sure.
simple, and so we help understand what you're talking about, and I know we do the same as well, where we each learn from one another as far as professionals go, and
Right.
I think that's a really good way to kind of assist our clients
Yeah.
like throughout the whole process.
And if I may add, in talking with other CPAs, we all work closely together. We really want to do the right thing for the client, and we want our clients to be compliant. And I really think that the state is trying to make sure that this industry they're trying to legitimize this industry, right? So the state doesn't want to have these backdoor deals happening between these different businesses, and they don't want off-record partners that are receiving compensation. So they're really relying on management and the CPA to be compliant, and the CPA to try to find where these monies are going. The money's
Right.
coming in, the inflows and outflows, and that's where the CPA comes in to try to keep these clients in compliance.
One of the definitions that actually comes up, completely relevant to that, is what is an indirect owner. Our definition of applicant has been amended to include 10% of either direct or indirect ownership. And one of the things when you're submitting an application and the business isn't operating yet, it's pretty clear to say, yep, these are our owners. But when you've actually had a year of operation, when you're doing your renewal, when you're going through the process and having a CPA put things like financial statements together, that's when they're going to actually see the evidence of where cash is flowing to. They're going to see, well, who's this person that received, the equivalent of 12% of the company's revenue? We're going to see a lot of these companies who might not have been running a clean ship or a tightly managed ship, potentially having some issues with having to pull people into the pre-qualification process or being penalized for not having the appropriate people in the pre-qualification process, and that's going to come to light when we do see some of these renewals come. So it's important to not only present your application correctly when you submit it, but to also operate this business recognizing these types of concerns.
And that's what I was going to say too. I think it's going to be very interesting to see what is presented and what is reviewed after these financial statements of the total operations are submitted to the state, along with the most recent tax returns, sales tax returns, a lot of that documentation where you can kind of do a forensic audit of the financials and where the money went and where the money came from, and kind of make conclusions there about compliance and any regulatory violations. So we always say, the more hyper compliant you are, the better, and we'll see how far down the rabbit hole some of these not to say that everyone's doing that, but certainly, some transactions might raise questions and cause some investigations to occur. So we definitely don't want that to happen to anybody. So that just kind of, making everyone aware that these are yearly, they have to happen 30 days after the end of the fiscal year. Before we move on kind of to taxes, I did want to ask, how long do these take to do? Because you're saying that there's yet to determine the exact procedure and guidance, and that might actually change your answer, but kind of ballpark how much this might take for a provisioning center, for a grow processor, just so those who are listening who aren't aware can kind of get ahead of the game and the deadline.
Get started.
Very good question. How much time will this take? And usually that depends on the volume of revenue that the company has enjoyed in the past year. So if a company has $10 million of revenues, obviously it's going to take more time than a company that only has $100,000 of revenue. But overall, we're tracing line by line. We're looking at bank statements, we're looking at deposits, we're looking at the sales ledger, we're looking at the expense reports. However, I'm hoping, as other CPAs, we're hoping that the state will issue some type of checklist that outlines exactly what the state is looking for, so that way we can spend more time diving into those categories and areas of the financial statements and looking at certain documentation versus wasting our time looking at maybe the utility costs, for example, versus the purchase orders. I would want to look at the purchase orders in more detail than maybe your DTE bill or your telephone bill.
Right.
Although those are legitimate expenses, but
And
we're
can be
hoping that the
relevant
state
sometimes.
can.
We've seen different setups.
So it'd be nice if the state provides some type of checklist
Sure.
that we can go off of.
Well, I guess that sounds to me like until we get something like that, unfortunately, these will probably be more time consuming because they have to be a little bit more encompassing, not really predicting what the state's going to be looking like. Otherwise, you run the risk of not being encompassing enough and having to go back and provide more information.
Correct. So if there is no official guidance or checklist, the CPAs, I would imagine, are going to kind of overdo the service just to make sure that we're not missing anything.
Gotcha.
And that's always, without any guidance, I think that's always a good rule of thumb. Just if you don't know, but there's some kind of vague instruction, just go above and beyond and give them more than they want so that you're covered if they do ask for less, not kind of do the bare minimum. And then if they actually say, well, we actually need A, B, C, D, and you only gave us, the very first half of the letter, then, you're going to have a lot of work to do to catch up and meet that deadline.
Right.
It's also a good, progress report too, so you can have an understanding of what your company did the last year and maybe, make adjustments as needed to, run a more efficient operation.
Yeah, absolutely. So having routine maintenance is key. You don't want to wait till the end of the year to gather all your financial data. And how are you going to remember or what happened 11 months ago as an operator or as a manager? So if you have routine maintenance, if you have a CPA and an attorney that you're working with on a regular basis, ask the questions. That we're here to help. Don't just guess because it could hurt you. So,
and it's also important too to kind of communicate, make sure your professionals are all aware of the same items, because I can, so if somebody meets with you and has you do something and then, we're not informed of that as far as the compliance area goes or the legal area goes, they might have you do something that would raise some flags here and there, and would better off be kind of run through us as well, or the the other professionals, so that everything kind of matches up and is consistent and makes the most sense. And something that's reported here that doesn't happen or vice versa can cause a lot of issues or raise a lot of questions.
That's a good
8
point.
months later.
yeah.
So let's move on to a couple of these other topics we wanted to touch on. So let's talk about like the difference between like a corporate tax rate, individual tax rates, and the different kinds of levels of government that applies to.
Sure. So as you may be aware, the most popular entity structure type is an LLC. However, that's not a complete picture of your tax requirements. So you can file as a partnership, as an S corporation, or even as a C corporation. If you're a single member LLC, then yet you're a individual sole proprietor for tax purposes. So there's no separate corporate tax return. Now with that, there's a federal corporate tax rate under the new Tax Cuts and Jobs Act that was enacted at the beginning of last year, 2018, with a 21% flat tax rate for corporations, meaning the C corporations. Mm-hmm. The flow-through entities such as partnerships and S corporations, the income there flows through to the individual partners or owners, and the tax rate on the individual side can be as high as 37%.
Right, as you get to those higher tax brackets.
The highest tax rate,
yeah.
Correct. Right. So, and that's actually down from 39.7 from prior to 2018.
Right, but even still, obviously, and depending on how much income you're demonstrating on the individual side, you could, in theory, keep showing the income in the corporation so that you can build that wealth up. And, obviously, you're paying double taxes when you do your dividends and things.
Correct.
But when your company's new, when you're trying to expand and build up, one of the advantages of taxing yourself as a C corp is you have a lower tax rate on the income you're making. You can deploy those funds, reinvest them back into your company.
Correct.
Or at least, maybe take them out when you're ready to. Maybe a year you didn't make as much income elsewhere or something.
Right. And the nice thing about a C corporation is because, again, we talk about this industry being still federally illegal, and some owners do not want to take the risk of having their personal assets on the hook for corporate liability. So a C corporation isolates the partners from that liability. So if there's a sales tax audit or an income tax audit and you're filing as a C corporation, any liability that the corporation is being assessed never passes through to the shareholders. Whereas if you're a flow-through entity, there's the risk of having that pass on to the individual owners. Gotcha. So sometimes the double taxation, it does cost you a little bit more. There is an upside to it, and it eliminates the individual
right.
liability.
And as Vinar and I talked about on our show with him a few weeks ago, it's typically going to be expected that at some time in your history as a cannabis business, you'll be undergoing an audit. One of the benefits is that shield of liability. So let's skip towards one of the topics we want to talk about here. Quite a few cannabis businesses are in cities like Detroit and Flint and places that actually have a local income tax. So let's talk a little bit about what that looks like and then the concept of apportionment.
Okay, yep. So to add to the corporate income tax, some cities, there's 24, I believe, 24 municipalities in the state of Michigan that impose income tax, whether it's corporate or on the individual side. And Detroit is one of those cities that actually has one of the higher rates among the other municipalities. And the corporate income tax rate can range from 1% to 2%. Detroit actually has a 2% corporate income tax rate, whereas Flint has 1%. And if you're a multi-licensee or a company that has multiple licenses across various jurisdictions, you will have to apportion income between those different taxing jurisdictions.
Right. So that'd be like if I have a dispensary in Detroit and then 5 or 6 other dispensaries throughout the state in places that wouldn't have this tax situation.
Correct.
Okay.
Correct. Or if you're in Battle Creek, Flint,
Right.
Detroit, Grand
Maybe
Rapids.
different rates in different cities. And
Right.
Right.
Those
Okay.
all, the cities I just mentioned all have a corporate income tax rate as well as an individual income tax. And you would have to apportion. So you would take, the tax return will look something like this. Total income everywhere, and then income just at the municipal level, whether it's Grand Rapids or Detroit or Flint. And then you're paying tax only on that portion of income attributable to that jurisdiction.
And I think that's something too to be aware of, because one of the questions for renewal is, have you ever been served with a notice or complaint for delinquent taxes from a federal, state, or local agency? So if you forget to file in Detroit, or you're late and don't get the proper extension, and you just forget to pay, then you get a notice, you'll have to amend your disclosure to say that yes, I was delinquent in my taxes as a business. Most of the time it'll probably get resolved, but that'll just be one blemish on your application. I don't think in that instance that I was just saying it's very egregious where it would result in your license being revoked, but little things like that can add up, and if there's some bigger violation, those smaller violations can be used against you more heavily, I think, just because it looks worse.
Or if you do find yourself in that situation and fail to update your application, then you could have an issue of having your license not be renewed if you knowingly submit a false application,
Right.
which is one of the most common denials.
Yeah.
So let's talk about like these estimates, like quarterly estimates, monthly estimates, because for businesses in this cannabis space, especially that are dispensaries and provisioning centers, marijuana retailers, we're going to be generating enough income where we have to, report that not like an individual would at the end of the year. How does that process work?
Right. So the taxing agencies do not want to wait until March or April
Of course not.
to receive their income tax, right? So you may be required to pay quarterly estimated taxes for your tax or for your income that's going to be taxed during that tax year. And usually the dates are April, June, September, and either December or January 15. So those are usually the 4 periods that you would be required to pay estimated taxes. And each city is different. The state of Michigan actually has different rules than the cities and also the federal government. So if you're a C corporation, you're going to be required to pay quarterly estimated taxes. If you're, again, along those lines as a C corporation, those estimates are because you're earning, you have earnings in that jurisdiction. And again, the taxing agency doesn't want to wait until March or April to collect those taxes. So the rule of thumb is either $500 or $600, or in most cases, it's anything over $1,000 of tax liability, you will be required to pay quarterly estimated taxes. And if you don't, there's going to be penalties and there's interest on your overall payment.
Right, so it's in your best interest to do it.
Yeah. The interest assessment is not too bad, I will tell you, but the penalty is stiff. It could be 25% of the tax in some cases.
Got it. So let's march right into our last topic, just because we're kind of taking, really getting into a longer show than I think we anticipated. We had a couple other ideas we might get to. I don't think we're going to have time for them.
Okay.
So let's talk a little bit about payroll, and then focus on the difference between like how you do payroll for an employee versus an independent contractor. I can say that when a cannabis business has the opportunity to do so, you're going to see quite a few independent contractors hopefully being deployed for a variety of tax issues, with 280E and the restriction of taking payroll deductions and things. When you have the opportunity to, bring independent contractors in, then that company can take advantage of a payroll deduction that the cannabis company couldn't, and things like that. So we anticipate seeing both employees and independent contractors. Let's just kind of talk about, from your perspective, doing like payroll, what that would look like.
Sure. So let's first identify the difference between an employee under common law and an independent contractor. If the employer has control over what we say is the where, the how, the who, and the when of the services or products being offered, then really that person should be considered an employee. But if the independent contractor, or if the labor is provided through someone that actually can dictate the results and the timing, then there's a likelihood of that person actually being an independent contractor.
Right.
And one of the big differences is, as an employer, having employees, I would be subject to paying and collecting FICA taxes, payroll taxes. Whereas for an independent contractor, I'm not obligated to do that.
Right.
Okay.
From a application standpoint, whether they're an employer and an independent contractor, you enter them into metric and consider them an employee as far as your application goes. But we're going to focus on tax here. So let's march into okay, so we touched on control. In a lot of cases, the types of people who'd be in these facilities and working in these facilities are going to, by default, effectively be employees.
Right. So for the provisioning centers, 9 times out of 10, the people working in those locations are going to be employees. So your bud tenders, your managers, and things of that nature, those typically are considered employees because of their job description and the job duties that they're offering. Mm-hmm. Whereas if you're in a processing environment or even a grow facility, you may have independent contractors. Maybe you have a certain group of or a certain company that you hire to come in and maybe to trim for you on occasion. It's not routine, or it's not on a particular schedule where you actually control the how, the who, and the when. So in that regard, there may be many independent contractors that a grower will use, or a processor will use, or even as a secure transporter. But again, we want to look at the who, the how, the when, and the where. If the employer controls that, chances are more likely than not that the person should be an employee, considered as an employee.
Gotcha.
Yeah, and it's definitely something to be concerned about and make sure you get right, because you can definitely, as an employer, get in trouble for misclassifying employees as independent contractors when they should be employees. So to go to Simon's example, for a provisioning center, I definitely can see where we have certain hours of operation. We have to be there to open up the store, be at the registers, helping patients out, giving them advice and ringing them up and checking IDs, and then the hours, the store closes down, we have to do the closing procedures, and then we get to leave. I can't, as an employee of a provisioning center, just come in whenever I want, help people out at the register, do some inventory, and then go home, take a 5-hour lunch, come back, and help out as well. I think for growers and processors, it gets a little bit more tricky, because I can see where they control some of the how, what, where, and when. But I also think for growers, where they're on some kind of cycle, it kind of is a little bit more questionable whether or not it's an employee or independent contractor, because there are certain growth cycles that need to be done, and they need to be watered at a certain time and check the pH. So I can see it going both ways there.
You really got to focus in on the contractor part of the word. Like, if you are hired to perform a task, you kind of control the means of how it's done. So for a grower, for example, if you have trimmers and their job is to harvest, like, you can still have a timeline where that needs to get done. You can still have access for a certain controlled amount of time, but you're not responsible for managing them. You're not responsible for basically ensuring that they're doing things according to your policies and procedures. It gets complicated in cannabis because there's a lot of regulatory control over just access to that facility, which makes it much more difficult to keep people in an independent contractor status. But the reason that it's appealing to businesses to try to have independent contractors is because they have less to do for independent contractors. Let's talk about, just from the accounting perspective, kind of to wrap up the show, what do you do with employees? Like, when you have someone who is an employee, you have accounting requirements, correct?
Right. So you're going to have to withhold and remit withholding taxes, which include federal income tax, FICA taxes, which are your Social Security and Medicare taxes, as well as state income tax. There's also federal unemployment tax that you as an employer incur and pay, and state unemployment tax. We call those taxes FUTA and SUTA. In the state of Michigan, it's handled through the Michigan Unemployment Insurance Agency. And those taxes are also, there's tax returns that need to be filed monthly to remit and pay the taxes. So you report the amount of wages that were paid and the taxes associated with those wages in those different categories I just broke out a minute ago. And then in addition, on the federal side, the employer is subject to filing what's called a 941 return each quarter, which is pretty much a reconciliation of the prior 3 months monthly payroll, right? And then they're also subject to file a quarterly unemployment tax return with the state of Michigan through the MyWAM website. It's the Unemployment Insurance Agency's portal for collecting the wages and the tax. And then the federal unemployment tax has what's called a 940 tax return, which is filed annually. So there's quite a bit of compliance, and if you're not compliant, you could be subject to fines and penalties at the end of the year. You need to issue W-2s to all your employees by January 31st. And if you have independent contractors, you have to issue 1099s to those independent contractors also by January 31st.
Right.
So as CPAs, we're very busy in January and February.
Yeah.
I always say that.
Through April. And
Through April, but January is the most critical month because we need to prepare all these year-end documents in such a short time. So, and again, if you don't file these returns or even informational returns such as the W-2s or 1099s, you as an employer can be subject to pretty stiff fines.
Well, I know Travis and I had looked into that previously, and it looked like for the first fine or so, if you don't give your employees W-2s, you just get a little slap on the wrist. But I think after a while, it gets pretty
it could start adding up.
It could. So your first offense may be a slap on the wrist, but the IRS and the state of Michigan does make an example out of people that are repeat offenders. And also to add, if you have new employees, you're supposed to report those employees to the state of Michigan. They run all their labor statistics, and they'll find out that you're not reporting based on your quarterly unemployment tax return with the state. They're going to say, hey, we see that and everything is based on social security numbers. So the state will find out that you have new employees in this past quarter, but you never submitted new employee documents to the state. And that's how the state and even the federal government pull their statistics for unemployment rates and things like that.
Awesome. Well, Simon, thanks so much for joining us this afternoon. Before I do the outro for the show, you want to just tell us a little bit about your practice and plug your business a little bit?
So, again, thanks for having me. I enjoy doing these. I'll have to get out here more often with you guys. I really enjoy it. So, again, as a CPA, we provide tax accounting, bookkeeping, and consulting services among various different industries. And there's only a handful of CPAs that are actually providing services to the cannabis industry. So it's important to have a good working relationship with your CPA to stay compliant. Having proper bookkeeping is critical because if you are under audit, and we've all talked about this before, there's a high likelihood of you being audited, whether it's at the federal or state level. You want to make sure your ducks are all in order. And if you don't have your documentation in good standing and everything's a mess, it's only going to cost you time and money. And if you're not complying with the state, I mean, as attorneys, they would probably
you're going to have licensing
issues.
Exactly.
So you're investing hundreds of thousands of dollars, if not millions of dollars. So why not invest the additional time and money to stay compliant?
Yeah, it's a lot like a lot of things. You do it right the first time, it's going to be much more affordable than having to fix it when you mess up.
100%.
So. Well, Simon is going to be one of our several amazing guests at our Cultivating a Successful Cannabis Seminar coming up on September 27th at the TCF Center, formerly the Cobo Center. We're in room 330A, correct? Yes, 330A. So please join us upcoming here on September 27th. We'd be happy to have you. And on behalf of Nick Galendez, Simon Gumma, and myself, Travis Copenhaver, thank you so much for joining us today. We'll see you next week. See you guys.
Take care.